Good morning, everyone.
Morning.
Happy Tuesday.
Good morning.
Yeah, let's get started. Wins for the week. Start at the top here. C, want to share with us?
I definitely will share. I think the spring break home buyers are in full effect. And I think realtors are finally out of hibernation. And there's a lot of activity. I actually have an offer accepted today. And I just did a pre-approval like 3 days ago. So
nice. Very nice. What's the story on that one real quickly?
Just an old agent reached out to me, had a buyer. We talked it over, and I wasn't sure if it was going to turn into anything anytime soon. And she was like, "Yeah, don't even bother sending me the letter. When we find something, I'll let you know." I was actually in the process of typing out an email to her, and then an email pops up that, "Hey, we're in contract."
Wow, that's great.
Yep.
Hopefully, the file is as clean as it was easy getting in escrow.
Yeah, it's super clean. So
awesome. Alex, win for the week.
Yeah, last week I did a presentation at an ADU company and let them know about some of the programs that we offer. They really liked it, and they're only going to be using me as their loan officer.
Wow.
So they've sent me 4 leads already.
Wow.
We meet with them in person. So today I'm meeting another person in Orange. So it's pretty good. Hopefully we get some applications in soon. I got one. I'm still waiting on some response from certain investors. It's going to be a ground up construction. They want to build up to 6 units on the property. So they have tons of equity on it. They only owe 300. Property is valued around 600. After the renovations complete, it's valued up to $2 million.
Wow.
And construction costs would be around $900,000. And it's estimated to take between 12 to 18 months.
Very good. Very nice. Kudos to you. Very nice. We'll circle back on a few points I'll make a little bit later on. You got a win for the week?
This past weekend, I had a conversation about a DSR second. So that was something I was able to present to a investor that was looking to build, has a set of properties and looking to build ADUs because of the recent, bill change where ADUs are a little more lenient. So he was looking to pull money out of what he already had, and his original loans were DSCR, so he was looking for something to pull equity without refinancing. So I was able to give him like a option of DSCR the second.
Right on. Keep the conversations going. Hey, Ian, long time. Thank you for gracing yourself. You got a win for the week you want to share? Is that on?
Ian, you're in a mute.
We'll come back.
Yeah, okay. All right. Okay.
Sorry about that.
Sorry about that.
Hey, how's it going?
Probably want to hear what I had to say anyway.
Let's hear it.
Good morning, everybody. Win for the week for me. I spoke to a young man that's starting out to buy, looking to buy a property, but it's a bit unusual because this guy is already looking for a $2.5 million property in Palos Verdes. So had a nice conversation with him, and we're getting the ball going. He's going to be putting 20% down. He wants to move next to his mother or around where his mother lives now. So interesting business that he's in. They're actually like an aviation company that with his partners, and what they do is they offer curriculum to universities for aviation curriculum. And when they do these contracts, they get $2 million, $3 million contracts. So they've already secured UC San Diego, and they're looking to secure Cal State Long Beach, and they're moving on to other schools.
Wow.
So
good for them. Good for you.
Future. Yeah, interesting and everything.
Yeah, keep us abreast on that. That's a big transaction there. Becky or William, you got a win for the week?
Me or William?
I just see that your audios are merged. Are you guys a team or?
Oh, yeah. We're wife and his husband.
Oh, your husband and wife. Okay.
Yes.
Well, your win is his win is yours, right?
Think so.
Anything to share or?
I just opened an escrow yesterday for cash out cases.
Very
The
nice.
the client asked me about the HELOC first because she needs the fund for her business open. But Peter advised me to instead of a HELOC, just go ahead proceed with the refi cash out case.
Yeah.
Yes. So we just did. So I just did it
Great.
yesterday.
Awesome.
Yes.
Yeah. At the big win
The
for
better
you as
rate.
loan
Yeah.
officers.
Better rebate.
Yes. And a larger loan amount, right? To be honest. If you guys can, as loan officers, right? If you guys can convince, obviously it should make sense, of course. But doing a cash out refinance, like Becky said, I mean, that's on a larger loan amount with better rebates. It's a bigger win for you, right? So when you are looking at HELOCs, always look at the alternative of cash out refinances immediately thereafter. Great. My win would be, so I've just gotten a bunch of not so easy files. I have a dozen of them, literally. They're all just not easy. One of them does entail a gas station. Was able to finally find a solution for this gas station, so I'm stoked. They're gonna get the letter of intent out shortly today. It's gonna be an $8 million deal for me. So I'm super stoked about that. The agent or the AE just called me earlier today. I have been calling and connecting with people for literally a whole entire week. I'm not exaggerating. And just to kind of really highlight for you guys, the win is just the persistence and the perseverance we ought to have as loan officers. When you get a file, there are times, yes, you have to turn away from the deal. Okay. Sometimes, I think I shared with you guys a few weeks ago, maybe a month ago, I literally walked away from a VA deal because they were shopping me. Then they used the whole my church, praise team fellow member and is also a loan officer, blah, 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 blah. And I just walked away from it. But then there are times where you're really trying to find a solution for someone. They came to you and they are earnestly asking for help. Hey, I got to refinance my gas station. Can you help? And gas stations in of itself are very tough. I mean, so I had to go outside of our preferred Giving Tree's preferred lenders and spoke with, just asking for referrals. Hey, you guys can't do it. I understand, but do you know someone else that can? And it just kept going and going. This one happens to be about three, how do you say that? 3 separations down, right? 3. And the borrower's stoked. I'm obviously happy. So perseverance and persistence, guys. Okay, especially in a market like this. Now, that being said, there's just a lot going on in the industry and just in general, right? Again, don't have to keep going over Iran, oil prices and all that, but it is a huge, huge disruptor in our industry right now. As C mentioned, yes, spring is in full swing right now. Buyers are ready, phones are busy, people are calling. But then when you have when you renew or continue the conversations right now, some of them is going to be, I don't know. I want to wait till the war is over. I want to see what happens as a result of this. I want to see if the gas prices come back down and see, right, if the rates come back down, right? There's a lot of this type of conversation going on. And it's very important for you as a loan officer to stay abreast on all the stuff, guys, okay? No longer, I don't know if anyone has told you this, okay? But so I'm going to tell you this right now, so allow me your ear here. I would make that argument. There is no other profession, okay? And when I say no other profession, I really literally mean no other profession. Not your CPA, heck, not even sometimes your attorneys, not your financial advisor, where a client has to disclose literally all things, everything about oneself to a loan officer. Do you guys understand that? Do you guys understand the gravity of that? It's not just, oh, let me just buy you a house. Yes, that's what you are selling. Sorry. Let me help you finance your property, right? Your first home or your second, investment property or your 10th. But do you guys understand to achieve that, in between that step, your client is literally divulging everything about themselves. Have you guys ever, as loan officer, whether you're new or you're very seasoned, have you guys thought about that? To think that you not only know their jobs and their children's name and their ages and where they work, but all just about their whole entire portfolio. You understand that CPAs don't know that? You guys understand that always do attorneys know that? Do you guys understand if you work with a financial advisor, you're not obligated to show them their tax returns. You're not obligated to show your financial advisor your entire portfolio. But one way, shape, or form, whether you do a thorough job up front as a loan officer, it will get disclosed to you. And you will sooner or later find out, hey, where's this transaction coming from? I need to source it. Hey, I see this additional income. Where is this coming from? Do you own 20% or more? I need the K1s. You guys understand? So there's a lot of trust. There's a lot of information that this gets disclosed. And so to that point, you really, as loan officers, have to be true professionals. And in a market like this, where there's a lot going on, right? Jobs report came out, 62,000 more expected than anticipated, right? Inflation potentially going up, rates potentially not being closed or brought down. You guys need to be staying on top of this. You have to be educated. You have to be confident, competent when you're out there talking, right? So a few articles I just wanted to highlight. I'm not going to go through it like I usually do, but just to highlight a few things, right? My first advice would be simple. Focus on competence before sales. Learn the guidelines. Learn how underwriting works. Learn how to analyze income, assets, risk. Learn how to structure loans properly. Okay? I'll share with you a story after this that I just recently got. Too many people try to market themselves before they actually understand the product they are selling. How true of a statement is that? How true of a statement? I'm reading some of this stuff, and it's like me going to church on Sundays, guys. I came back from a great Easter service. That's where my family and I we attend church, and we were just so blessed with an encouraging, inspiring sermon regarding the Lord that we serve. And this is not a religious statement here. And then this morning I'm reading these articles, and how true is that, right? We just like to market ourselves before we actually understand what we're selling. All right. He further goes on and says, the hallmarks of a great mortgage professional. So Ragnar, you've been coming on for the past 2 to 3 weeks talking about what's a professional loan officer. Here it is. Here's a great quote explaining this. Explaining loan structures clearly, comparing multiple options objectively, not just one. Okay, you want to be a Peter, 3 or 4. Okay, documenting why the recommendation is the client's best interest, understanding the compliance. This is a big one. Compliance framework they're operating in. You have to focus on becoming excellent technically. The business will follow. Okay, what does he mean by this technically? No longer are we as loan officer for many years now, especially because of Dodd-Frank, are we use sales cars, guys? That doesn't work. And I'm going to give you an example shortly. You can't be this cheap, sleazy sales cars like, hey, I'm going to get you the best rate, right? Wink, right? It doesn't work like that anymore. They will walk away sooner or later. Somewhere down the line, okay? I'm going to share you 2 stories. One involves C. See if it's okay. I'm going to share the condo one. Second thing I wanted to share real quickly is this question, and I actually did want to take a little bit of time in posing this question to you folks as originators, young, old, experienced or not. Okay, sorry, it's up here. It's this sentence here. I always tell them the first thing I would do is really figure out what they want out of their brokerage. Okay, I'm going to highlight it and leave it there. This question might be different than the owner of Giving Tree, but I want all of you here, Ian, C, Becky, Alex, right? On, Paul, whoever else is not on this call, but it may be listening, Christine, the other Paul. You may not be the brokerage, but you are a loan officer. And as a loan officer who's 1099 and who is really considered by tax code self-employed, what is it that you want to do with your mortgage business? If you don't have that figured out yet, I would say stop everything that you're doing. Stop running the rat race of trying to become a 6-digit producer or a 7-digit producer and ask that question first, right? Because, and I'm not picking on anyone here, but I can ask a loan officer and they say, I want to make a lot of money. Okay. I want to be an expert in all things. Okay. But that's not really answering the question of what is it that you want out of yourself? Okay. Meaning you don't really have an exact plan. You don't have an exact executable plan. You don't have a vision. Well, you might have a vision, but you don't have the goals to get to that, right? So if someone was to say something like, I want to be the expert in reverse mortgages, boom, there's a goal, there's an executable vision. Now you can take steps towards that. I want to make $300,000 this year, fiscal year. Perfect. Let's see how we can get that. Now you break it down. That's what, $25,000 a month or so, right? That's how do we get to $25,000 in commission a month? How many loans is that? 4, maybe 2. Well, I want to focus on commercial loans. It might just be 1 a month, right? Now you can start scaling and devising plans how to get there. You have to figure out what you want. If you're just here because Giving Tree is a cool place, okay, they offer so many different products, and I'm just going to make 6-digit figures, I'm going to make a bet that it's not really working out well for you right now, okay? Figure out what you want out of your brokerage. Figure out what you want out of your profession first. Get granular. If you don't know how to do it, give me a call. Give Peter a call. Well, let's go through it, okay? This is part of business planning, okay? I thought it was just really neat to see UWM come out and just put this out there, okay? A bit smaller ones here, guys. I want to, oh, it didn't share. I do apologize. You guys, someone should have said something. You guys didn't see my highlight then on the article, huh? Right here. Sorry, right there. There it is. Okay, if you want to snap that, you want to copy it, I always tell them the first thing I would do is really figure out what they want out of their brokerage. Thanks for paying attention, guys. All right.
I'm so smooth. We didn't have to read.
The third thing is just 4 things I want to really quickly share here. Condo. I missed this one the past few weeks because I went on, my little morning rants, and I do thank you guys in advance for listening. Did you guys hear about the condo changes? It's not in effect yet, but have you guys heard? It's actually big. As loan officers, you guys should be following this stuff. As of August 1st, they are going to get rid of the limited review. Okay, that's big, guys. But not only that, they're going to most likely increase the reserve requirements, okay, to 15% minimum. Okay, there's a lot of pushback right now from other lenders. Big executives of big, large mortgage companies are ready to go on Capitol Hill, okay, and fight this, okay. But no longer is a condo review going to be allowed. So for the sake of time, if you want ChatGTP it, look into the condo, the changes. You guys can read about that, but please be aware of it. Finally, look, there's just a few takeaways for this one here, okay? Because I know that this is going to be something that you and I, as loan officers, we're going to come across, okay? If you haven't already, or if you aren't right now, so like C got into escrow, that's great. You know, Alex, you're going to go into escrow, right? As well as Ian and everyone else here. This is going to come up, okay? This is just a fact. Buyers are going to be hesitant right now, okay? And so when they are, here's just a few suggestions to highlight, okay? Focusing on the bigger picture. So it's not a matter of, right? It's not a matter of the rate that they want to focus on. It's the house, right? You guys have heard the phrase, you're dating the rate and marrying the home. You marry the home, you date the rate, right? I know it's cheesy, but it kind of sticks with you, right? You want to marry the home. The rate you're not marrying, you're going to date it, because why? You're going to refinance it later, right? So again, I won't spend too much time on this, but here's another thing. Transparency, okay? When you're dealing with a client, don't be that cheesy sales car guy who is just selling you this nice shining, vehicle, not really talking about the price tag, but furthermore, not even talking about like the cost and whatnot that's associated to it. Be transparent up front, right? Because when you're transparent, you just come off more honest. And if you're more honest, you come off more trustworthy, right? So right here, we want to make sure our clients understand all their options. Sometimes it makes sense to move forward now and refinance later if it improves, but my goal is to make sure my clients feel prepared and not pressured, okay? This is a great line here at the end. Volatility doesn't mean instability. It just means more strategy, right? How are you strategic though as a loan officer? You got to be competent, guys, okay? As far as, the rate is going, the recommendation right now is, not, or to lock, but here's what an expert says. The response is, we don't have a magical crystal ball to look ahead to tomorrow or next week or in 3 months from now. If I did, we would have a different strategy. So we try to shift this conversation away from the interest rates and more towards the payment. Your bank account isn't paying an interest rate, it's paying a mortgage payment. We want to make sure you're comfortable with that, okay? That's something that I have personally have implemented in my consultation now. And so towards the end, as I give them the scenario, blah, 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 and before I give them a payment, I just ask them, hey, client, just out of curiosity, what can you give me a mortgage payment range you will be comfortable with? Give me a low end and give me a high end. That's literally what I do on every single consultation right now. And why I do that though is because it helps me gauge when I deliver the payment, okay? When I deliver the payment, it helps me gauge if I'm going to get any resistance or not. So if someone says, oh, my payment I'm comfortable with is going to be like $4,000 to $5,000, and my payment I have prepared is $4,200, it gives me an easier, I'm more at ease to deliver that $4,200 payment because their range is because it's in their range. Now, if that payment was $5,500, now my brain is thinking like, oh, I gotta come up with some strategies, right? As the article says, and prepare for that. Whether it's a temporary buy down or a permanent buy down, or having to talk about seller costs, or having to go that now. Hey, in 6 months we are expecting rates to come down. Can you really afford $500 a month for the next 6 months? Yes, great. Let's look into that. I'll put you on a campaign to make sure we monitor rate for you. As soon as the rates come down, we'll refinance. Something like that. You have to be prepared with different strategies. Okay, so I hope that helps, guys. That's it for me to